Just look at the foreclosure filings, okay? Foreclosure filings are up 18.1% as of August of 2025 compared to August of 2024. You don't think that's an alarm bell? You don't think that's something that we need to pay attention to? And then they just brush it off and say, well, people are just searching stuff. Come on. Not to mention the foreclosure filings have been steadily rising for the last 6 months. And I'm not saying that we're at 2008 levels of foreclosure filings here. That's not what I'm saying. I'm just saying that we're still in the early stages of this, and we need to pay close attention to what's going on because prices are already coming down in many areas across the country, even without a massive surge in foreclosures, even with the government helping all of the delinquent FHA borrowers. Imagine what the picture is going to look like when all that goes away. Here's something funny that this article says, and it kind of relates to the channel here. It says, for the doomer theories of 2008 redux to be true, you would need that sort of perfect storm: layoffs, falling house prices, and a high share of recent home purchases. Well, we definitely have a high share of layoffs. We definitely have falling home prices. The one thing we're missing from this is a big surge in recent home purchases. In fact, home purchases have been in the gutter for a while now. The last 2 or 3 years in a row, including this year, have been some of the worst home selling markets we've seen in like 30 years. But people who do own homes right now are wasting no time in refinancing. This is something that we kind of talked about a couple of weeks ago. And right away, when you hear this, it makes you think, well, the current homeowners are just taking advantage of lower interest rates, Michael. What's wrong with that? Well, what's wrong with that is the majority of people who are doing this, more than half, are doing what's called a cash out refinance. Right away, they say that Americans are jumping on the opportunity to refinance their home loans because the refinance applications went up 58% over this past week since mortgage rates have been coming down into the low sixes. But conveniently, they don't tell you what type of refinances they're doing. They just say that it's a refinance. But we know from ICE data as well that the majority of people who are refinancing are doing what's called a cash out refinance, where they pull money out of their house to use for whatever reason. Most likely, a lot of people are using it for living expenses right now because of inflation. And get this, they say that demand was even stronger for those seeking adjustable rate mortgages, which is where the borrowing costs fluctuate and are tied to the short-term interest rates in the economy. So the share of refinancing activity tied to adjustable rate mortgages rose to 13% in the last week, which is the highest share recorded since 2008. Do you think it's like a big coincidence that all these things that haven't really happened since 2008 are suddenly happening again? I think these are dead-on economic indicators of the current state of affairs. I think this is telling us exactly where we're at right now. But it's always different this time, right? That's one thing we've heard over the past few years. Well, this time it's different. Every time it's different. This time we have inflation. That's a major problem that we didn't have back in 2008. This time we have a job market that has been deteriorating since last year, even though the official unemployment rate is still sitting at 4.3%.